So in today's video, I am going to show you a very good strategy that you can use for your intraday trading. With this, it helps you to trade every day. So at least you can get an entry, even if it's one or twice in a day. It's very good for day traders and also for scalpers. So EMA crossover is very good for trending markets. In fact, in general, moving averages, if you are using any indicator such as the moving average, it needs a trending market. So I will show you how to go about that. So go to your 4 hours time frame. This is the 4 hours. Click on it. So I am in the 4-hour time frame right now. And if you observe, we are in an uptrend currently. That is why I told you that this strategy is very good for a trending market. If you cannot find a trend, please don't use this strategy. I am just giving you a hint ahead of time. Okay? So what trend can you see here? We are in an uptrend on the 4-hour time frame. That is the first step in using the EMA crossover. So once you have gotten your trend, all you need to do now is to locate where your price is. So for me, I can just simply pick, let me just show you how I do this. I've recognized my trend. We are in an uptrend. So let me delete this line. I will now pick a box and then I am going to draw the latest 4 hours for me to pick the trends there. So the latest candles, the candlesticks on the 4-hour time frame. You can pick the first 2 or the first 3, whichever one. You can find a trend inside of those 4 hours candlesticks. That is why I am highlighting them with a box to know where I am currently. So after you have done this on your 4 hours, so you move over and add your EMA indicator. And the one that I will be using for this is the 9 and 20. 9 and 20. So the 9 moving average, that's the 9 refers to the period. So the 22 refers to the period. I will show you that. Go to your indicators over here. If you don't know this website, it's just tradingview.com for beginners. Okay, so go to the indicators, click on it, and you can type moving average exponential because EMA is exponential moving average. So moving average exponential, click on it. Once you click once, it is added. You can see it has been added here, but we need 2 of them. So I will click again. So I'm going to click. We now have 2 of the moving averages. So that is what I just need. I've added them. Now, if you are new to using TradingView and you are using the basic plan, you can add more than 2 indicators. So if you have something like RSI or you have another indicator there, like the Bollinger Bands, you can delete them before adding these 2. If not, they will require you to pay first. So I am done adding my indicators to the chart. I am going to click this to cancel. Now we are going to set our EMA so that we will know when it is crossing over. So this one is automatically on the 9 period. That's the default for TradingView. So go to your settings over here, click on this. You can see everything. So me, I don't want these things that you are seeing here. I don't want them. So I'm going to remove these labels on the price chart. I'm going to remove them. That is all that I need. The lines, I can increase the lines. I will leave the blue. So the thickness of the lines, I've increased it. You click on OK for this particular one. Now the second one, I am going to edit it. This input, click on the input, then the length is checking, this average is checking the average of each of the candlesticks, their movements and their directions. This 20 will measure the previous 20 candles, whereas the 9 moving period, that one will check the previous 9 candlesticks. And the source, we will leave all to close. So we want a decision to be made when the candles have closed already, not when they are opened. There are a lot of options. I choose the close. Now go to style for the 20 so that you don't have the same blue and blue color. So I'm going to click on the red color for the 20, and I will increase the thickness to be thicker than that of the 9 to show me that is the bigger one. That is all that you need. I will remove these labels as well. I don't want my chart to be clean. So you click OK. We are now ready to go. So we have added on the 4-hour time frame, we have added our EMA, and we have also drawn our candles. Now we are going to go to a lower time frame so that we can see the trending market clearly over there, because in a day you only need like 6 candlesticks that are 4 hour. The time frame 4 hour, they need to be 6 for a whole day to finish. We can't be trading that on the 4 hours, a higher time frame. So if we have already drawn the zone where we need to be trading, we are now going to a lower time frame, such as the 5 minutes. So whether you're a scalper, 5 minutes is very good for you. Whether you're a day trader, the 5 minutes will be good for you as well, because if we are checking a higher time frame of 4 hours, we need something to give us a trend that we can measure. So 5 minutes is the best that I have seen for this EMA crossover strategy for intraday trading. Okay, so we are going to go to our 5 minutes right now. So this is our 5 minutes. From where are we starting the candles that we drew, the 4 hours? This is where the box is. Now I am going to enlarge this to give you a full grasp of what is happening. Just look at this. We have seen that we were in an uptrend, so we are looking for a trending market, and on the 5 minutes we can see a clear trend here. Price is pushing up, then we will have a retracement, then we have a push to clear this previous high, then we have a retracement, then we have a push to clear the next high, we have a retracement, then we have a push like that, and now we are having a retracement. Now, if you have identified your trend like this, all you need to do is to join the trend. And this is where the EMA crossover will help you to know when to join the trend. How are you going to do that? Anytime that you are about joining a trend, wait for a retracement. So we have, let me enlarge this for you the more to understand, so that you can understand very well. Now, let me enlarge more again. Look at this. Anytime that you see the trend is forming, this blue line, that's the 9 EMA, it crosses over to go above the red. Anytime that this occurs, this particular candle is the one that triggered it, you are going to take your entry. You are going to take your entry at the close of that candle. Your stop loss is going to be below the low that initiated that move. So it's going to be below it. For this particular one, I will aim, since we are in an uptrend, I will keep holding on. Or you aim a previous high. For scalpers, you can just scalp within just the next 1 hour, you are out. It depends on how you want to do this. Some may just use risk to reward ratio. Once they have 1-3 or 1-2, they are out of the market. It all depends on what you want. But for me, as a day trader, I will hold on to this type of trades, and you will have maximum benefits. So you are going to take your entry. Now let's take this. We've taken this. Now, anytime you see a pullback, again, I have been seeing a lot of people telling you, once you see it crossing downwards, you should exit. That is why I am telling you that it is a trending market you should follow. Follow a trend. I am using EMA crossover just for entry. I don't use it for exit. I use it for entry. So you can now see that even though it crosses below, you don't exit. It is a pullback. And anytime it is crossing up again, the second time, you take your entry. So it depends on where you are meeting the market. If you come in and you are seeing the market here, anytime you see the entry, some may add positions here, but you add responsibly and know what your risk is anytime that you are adding your position. So once it crosses over again, you take your entry. you set your stop loss below, and then you will aim for 1 to 2 or 1 to 3 continuously like that. You can see how you do these things. As it pushes up, it retraces again. Look at it retracing. Anytime you see that it is pushing up again and then it causes a crossover, the blue line crossing over the red again. When it crosses over the red again, you take your entry. So this was the candle that triggered that. So you see, this gives you a wider risk. So you will need to hold longer. Look at it, it's pulling down again. Anytime you see that it pushes up and there's a crossover, clearly you take another entry. And this is what some people use for stacking their positions. But know that the way they do it is they may enter with one lot here. And when it has given them some profit, they use half of it. So from here to here, if you were risking, let's say, if I use one lot here, let's say you were risking $200 on this, you risk $200 on this. If it has given you $200 at the time that it formed this one, you can risk 100 here. And then on this particular one, you can risk another 100, and you keep holding them like that. But you have to be a very good trader to know what you are doing. You have to know what you are doing before you do this. If you don't, just hold on to your single position and wait for it to keep giving you the profit as you hold on. So the market is about to open with this Sunday. So it will open today by 10 p.m. UTC +1. And you can see that it is retracing again. So you are waiting for this particular blue line that you are seeing. Once it crosses this red line, you take your entry. You can see how sweet this strategy is. So all these previous ones would have given you your risk to your profit, and you can now wait for this particular one again. Make sure that as you are stacking, you are shifting your stop loss to break even so that you won't run at a loss if price starts pushing downward. So that is how to trade the EMA crossover. And you can use this for intraday trading. It's a very good strategy. Even if you have a small account, you can do this. And if you have any question regarding the use of this intraday trading strategy using EMA crossover, just let me know in the comment section. For now, do have a wonderful day. Bye.